Today I've got for you 3 stocks smart money is buying before 2026. Each represents a unique opportunity to make a huge amount of money here in the Canadian stock market. Each is in a different sector with a different big money investor who's backing them. And we're going to start today with ARC Resources and Rick Rule. Now, ARC Resources, of course, a major Canadian natural gas focused energy company. And Rick Rule is one of the most famous Canadian energy investors and commodities investors out there. And he claims that this is the best managed company of the Canadian energy companies. Actually, he claims it's the best in North America, so beating out the Americans as well. Pretty big feat. Now, if you look at ARC Resources, they're up just 0.4% in the past year, basically nowhere. And the underlying sector has changed dramatically compared to December of 2024. December 2024, we were talking about maybe opportunity coming with LNG Canada. Now, in December of 2025, we're talking about not only is LNG Canada phase 1 up and running, but we are going to see FID on phase 2. We're going to see Silicim's LNG. We're seeing massive investments in natural gas power generation, thanks to all the data centers. We're seeing gigantic investments across the United States in natural gas for both LNG and data centers. All of this is creating a structural boom for the price of natural gas. It's also just totally changing the way that this commodity is priced, which means that the equities should be running alongside it. ARC Resources has not, and they haven't because of some short-term operational failures. They had this Hitachi project, this major expansion that they were running, didn't work out the way they expected. Thing is, if you listen to recent interviews with all sorts of major investors out there, guys like Eric Nuttall, who go on BNN quite often, talk about the Canadian energy sector, even guys like Rick Rule, and you ask them about the challenges that ARC has faced, they're not anywhere near as worried as the market would seem to be. Right? If you look at the drawdown the stock's faced, you would expect that, oh my gosh, this major change must have been a huge blow to the company, must have totally changed the valuation going forward. They don't think that's true. Actually, in fact, the company has claimed that the problems at Hitachi are solved, that the problems that caused this drawdown, again, that's a 20% drawdown this year, that's over. So where is the money going to go? The next time you see a report from this company that brings up how awesome their resolution is there, how much different that is from where they are, when they talk about the insane pricing they're getting on their natural gas right now, and when they talk about the structural demand for things like condensates, of which they are a major supplier, man, these guys are in for a treat. On top of that, you've got this whole boom story going on in Canada with energy. A lot of money is starting to flow into the sector. The sector is actually outperforming a little bit this year. Oil sands players have been performing way better than the commodity itself. So oil itself is doing a little bit better than you'd expect, considering that the commodity is at this like really challenging point. Investors are looking through short term. They're looking for long term. And I think ARC Resources is one of the best opportunities. I personally own plenty of shares of this company, and I've been acquiring more, and especially if they're going to offer you a discount, right? The shares are trading again 20% lower than we saw earlier this year. I'm just basically counting that extra 20% as pocket change, right? That is just gravy for me because I would be buying this thing above $30 right now with the massive change. The second company on our list today is Brookfield Corp, and this is being bought by Bill Ackman, still one of his most major holdings, even as he sells down some of his Google shares, which Google, man, what a performer over the year. But Brookfield is a really, really interesting company. And the biggest deal for them right now is infrastructure. Infrastructure spending has gone through the roof, not only here in Canada, where it makes up a gigantic portion of our federal budget and will bring huge money for these corporations that are being used as private partners in all of these deals. Because again, the major point of all this infrastructure spending is to bring on private partners. Brookfield, of course, they might have an unfair advantage, but they got a huge advantage here in Canada. But also, huge money going to the States for the infrastructure build out there. Specifically, you're talking about all of the AI related infrastructure that is booming. These guys have formed a whole bunch of deals to provide data centers and power. They're going to be there for all the grid upgrades. They're going to be there every step of the way along the infrastructure boom. And it's not just a Canadian or an American story. It is across the Western world. We are talking Europe investing significantly into new infrastructure. We are even talking South America, Southeast Asia. Everywhere on earth is investing in new infrastructure as part of not only the AI boom, but also of the general boom we've seen in spending. Everybody is looking at defense in a different way. Everyone's looking at energy in a different way. And all of this brings money to the pockets of Brookfield. On top of that, their stock is being a little bit shaky over the last couple of months. You've seen, despite the fact that, again, if you look at that chart, this is a max chart, so we're zooming right out. They are an insane compounder over time. We're talking market beating returns, 14% since incorporation. So since 2001, 14% yearly compound annual growth rate. Insane. But on top of that, there have been dips where you could buy the stock at crazy prices. You see the dip down there between 2022 and 2025. If you bought down there, it was down in the $30 range. You could have already doubled your money. You even see a short-term dip earlier this year when you had all the tariff scare. So if there are more fears as we run into this story of the insurance business they're getting into maybe being not as profitable as some think, look for that dip, because I can tell you that that will be a huge buying opportunity. And these guys manage to be such a good manager of assets. And like they just, again, as far as money managers go, when you're outside of the stock world, when you're outside of the real estate world, there's nothing like Brookfield. They're a unique entity out there. They've been performing like an absolute champion over the years. And Bill Ackman's buying it, right? You talk about Pershing Square, and you can love the guy or hate the guy, but you talk about a company that has had gigantic wins along the way, right? Be it a Google, be it a Brookfield, right? They've had some gigantic wins along the way. These guys are guys that I would listen to. They do their due diligence. They look at this company and they see it as significantly undervalued to what it could be worth. And I look at a company that has already performed like an absolute champ for decades. And again, there are short-term headwinds, which could lead to huge opportunities for me to buy, right? That's exactly the kind of recipe I'm looking for. So I'm looking to pick up more shares. I own a few. I bought a few back when it was dipping earlier in the year in the sort of $40 to $50 range. Right now at $64 Canadian. I might be waiting for a dip, but hey, I don't think buying here and holding for another couple decades, I would be that mad about the few dollars I save versus waiting for a dip. Do not miss out on opportunities just because you're hoping that the price goes down. That would be my advice in general, right? Obviously, I'm not making decisions for you, but I think this is a really interesting opportunity. I'm personally looking to pick up a couple of shares, and I'm looking at the insurance storyline because I don't think it's as bearish as some people might think. Speaking of bearish, our third stock on the list today is Constellation Software. What an interesting story. And the investor that I've been following on this is Ernest Wong of Baskin Wealth Management. If you don't know this guy, you don't know the podcast, please go listen, because these guys are really, really good at what they do. They are really smart, and they break down really high level things for regular retail investors like you or I, which is huge. Now, if you look at Constellation, these guys are one of the stocks I talked about a couple of weeks ago where I was talking about, okay, you know what, there's some shakiness. But since then, the drawdown on this stock is ridiculous. You thought what they were doing to ARK was ridiculous? Look at this. If I find the peak on the chart right here, and I go, that was 5,181, and we go all the way down to where we're sitting at right now, 3,300. That is a 34 and a bit % decline. And the whole story here has been about AI disruption. And I shouldn't say the whole story, because there's also the story of Mark Leonard, legendary founder, Gandalf imposter, of course, with the awesome beard. Go find a picture because he's awesome. Stepping down, right? He had some health issues. He's stepping down. That happens. Founders leave companies. That doesn't change the fact that there is a massive team of incredible asset allocators at Constellation, and that even with a 35% drawdown on the year, these guys are compounding at a 15% rate over the last 5 years. If I zoom right out to the max, they're still after a 30. Look at that drawdown on the chart. Ridiculous. After that drawdown, these guys are compounding at 30% a year since incorporation here, since they went public. Like, that is insane. That is a wild compound growth rate, right? Again, Brookfield is outperforming the market at 15. These guys are double that. And what is the real risk? You're looking at AI potentially disrupting software. That's been a risk with stocks like Adobe, that it gets hotly debated on the internet. That was a risk with Google. I remember sitting here last year and people were telling me that Google is going to be half the value that it was then, because it's going to get parceled up by the administration down in the States. They're going to cut Chrome off of it. They're going to call them a monopoly. The Google search business is dead because ChatGPT is going to kill it, right? Everybody was talking about those stories. Google didn't get disrupted. Google actually had one of the most crazy years of its life. And Google is already stepping forwards as one of the leaders in AI, with Gemini just killing it, with Google using AI so well within their own ecosystem and with people loving it. So then you look at things like maybe Adobe, maybe that's going to see challenges. Maybe some of these other softwares are going to see challenges. But what I don't see having a massive challenge is the exact kind of VMS software that Constellation makes. They make mission critical vertical market software, really small, unique pieces of software that a business needs to work in order for their business to run. Why? Just why would that be the type of software disrupted by AI and vibe coding? It didn't make sense to me months ago. It doesn't make sense to me today. And on top of that, the actual team at Constellation, and they don't do a whole lot of investor relations. Again, why I think you got to go listen to Baskin and what they talk about there. And Ernest just does a fantastic job of breaking it down. But the entire team at Constellation, anytime you can get a peep out of them about this AI story, says it's making their work better and more efficient. Because think about it. If you're a business that needs a piece of software to work, sure, AI helps. But you know what would help even more? Having a team of experts from Constellation or one of the many software companies that they own under their umbrella come in, figure out exactly what it is you need, and build it for you. And yeah, sure, AI is going to make it easier to build, but why would it be that businesses don't want professionals helping build the software? That didn't make any sense to me. I don't think the disruption is really there. And I certainly don't think selling down 35% of the value of a company is a smart move in this kind of time period. Yes, there's going to be disruption, but I actually think there are lots of other companies that are way higher risk of disruption from AI than Constellation. And I think the fact that these guys are being thrown out, it's exactly the baby thrown out with the bathwater storyline here that makes value investors so interested. You're seeing more and more interest pick up in this company, and being a Canadian company, not, super well known, being a company that has such a high stock price, right? People have been saying it needs a split for a while now, to be quite honest. It's kind of going under the radar. And when you see a story like this, where the market seems to be making an irrational move, smart investors buy. That's what the guys over at Baskin have been talking about. And that's honestly what I'm doing right now. Again, this is the kind of dip you're never going to find. And how often you get an insane capital compounder software company here in Canada who's running at a crazy profit margin. Like, genuinely, this is a one-of-a-kind business, so I'm buying it. All three of those stocks offer a unique opportunity in a different part of the Canadian stock market. All three, I think, are going to perform incredibly well over the next 5 years. And I'm trying to pick up shares here before the end of 25, going into 26. I'm following some of the best investors out there. And I think that, honestly, if there's anybody that I listen to, it would be these guys. So I strongly recommend you check out these stocks, see if they fit into your portfolio, see if they fit with what you're trying to do, look at what they do over your time horizon. And I think, you know what, there's going to be some investors out there that have found a gem today. And if you like what we do here on the channel, you like listening to these kind of Canadian stock market stories, please do like the video. If you like following along and talking about lesser known Canadian stories, please do subscribe. And I hope I see you in the next one.